Hi, good morning. It's Joel Olson here again, giving you a variable rate update on what is happening with the interest rates as far as variable rates are concerned. Not a lot, as much movement in the past couple weeks. Things have stayed relatively static on where they were before. So as a reminder, the next Bank of Canada meeting is June the 1st, which is next week. So next week could be a more of a different video than what you're seeing today. We've seen in the last few weeks, since the beginning of May for that matter, that the vast majority of housing data coming out indicating a major slowdown. In fact, in some markets, almost a halt. Now, on the ground, what we're really seeing, as we saw a couple weeks ago in some of these bigger centers, thinking Vancouver, Toronto, Kelowna, these types of places. But now we're seeing some of our smaller markets that some of you that are watching this video might be in. We're seeing some pretty meaningful slowdowns as far as price point. In fact, I saw one today in a smaller market that had been a lot of multiple offers, sold for about 15% below asking price. So there's no question the market has slowed down everywhere, and if rates going up being an impactful part about that. And then, so I think that if we think about the idea that rates were increased with the idea that rates would need to slow in the market, mission accomplished. Mission accomplished. And so we've seen the sentiment as we look at articles. CIBC came out this morning saying that, hey, the Bank of Canada doesn't need that many more rate increases because we are not in a situation where things haven't slowed down. This morning, when we look at European central banks saying that that they don't want to release a lot of things or change things around quantitative easing or pulling back on some stimulus because inflation is a result of supply chain bottlenecks and disruption, which is a true story. So we see that being the story around the world. Don't forget that as in addition to rates going up, the Bank of Canada has stopped quantitative easing, so bond buying, which, in a nutshell, and I know if you're a little more sophisticated on this, you'll say, well, that's not quite exactly the right explanation, but, basically what happens is that the government buys off, bank bonds, and, it's kind of like if you own a market and your customers is the government and they just bought your inventory all the time in order to keep, in order to keep your stocks empty so you can keep putting more stuff in. So that's happened. So we have a lot of ways where money printing has slowed down in a meaningful way. So do I think rates are going up? The prediction right now is still that the rates would go up next week. But, we might see the next week that really, really narrow down as every single day more housing data coming out saying we are 100% seeing a slowdown and a lot of fear around recession. There's a lot of people trying to downplay the ability of a recession to happen. A lot of people trying to really discourage folks from doing that. So that is a big deal as well. Now, the other thing I want to really touch base on this video, and I've touched base on it before, but it is so important. A variable rate does not have the advantage as just having the lower rate than a fixed rate. Certainly, lots of time you look at rates going, 2.5 over 4%, but we need to really zero on the fact that a variable rate's advantage is that it has a penalty structure. So if you sell that home, if you have to get out of that mortgage, that is 1/5 of the size of a fixed rate. That's a very, very important thing, especially if we go into an uncertain world. We have a series of clients that, were quite concerned they were in variable rates or fixed rates. And I've seen a lot of those clients say, hey, look, now I got to sell. Life has happened. I'm retiring, or I need to be close to my grandkids, or I need to, I'm going to cash in the market. A ton of reasons. And the moment we put you into a fixed rate mortgage, we erode that equity. How much worse when we erode that equity if we think a situation is that there's not, that prices are flat or declining in some places. So in a nutshell as well, we have to remember that some banks, as the rates go up, penalties will go down. So this is can be a good time to refinance from that perspective. But not all banks, not all situations have a situation where that would be applicable. If I use a big five bank, RBC, CIBC, TD, Scotia, Bank of Montreal, they have what's called a posted rate penalty. So it means that when I take a mortgage out, and let's say I get a mortgage at 2%, and I go, well, great, rates are at 4% now, so you're going to save money, or you're going to make money by letting it back. They go, no, not so fast. We have to assume you took the posted rate. The posted rate is something higher, so we have to assume you took 6%, even though we can lend it out for more, we lent it to you. So all those things are very, very important, because it means that when you go into a fixed rate, you have a very, very dangerous situation that reduces your flexibility. Do you really want a mortgage that has a situation where, over the next 5 years, you have less flexibility and less ability to get out of it, and less, when the world is rather uncertain from that perspective? So that's our variable rate update. The last thing I want to leave you with is that if you are scared about your current payment, This is what I see a lot of right now. People going, well, I can manage my current payment, but I'm worried if it goes up farther. But if you get to the point where you're scared of your current payment and you say this is not manageable, there are some ways we can re-amortize and do a payment reset. So do reach out to me. I'm here to help on any of those types of things. So don't, if you're really worried about those situations, let's brainstorm. With a lot of equity in your house, there's a lot of things that we've done, some repositioning. So let's talk about how to get that in a little bit better of a cash flow position. Certainly there's an argument to be made that, like if you're holding some debt or if you don't have any savings, there is some ways that we need to restructure your finances on your mortgage side. Thanks so much. If you like this video, please do share with your friends. Please do subscribe to our channel, and we appreciate all your support. Thanks so much.